Hello friends, welcome to my channel and thanks for watching this video. Friends, as we have ended with one more volatile week in the US stock market or in the Wall Street, this is the perfect time because we have ended with one more week to analyze what has happened in the last 1 week and what will probably happen in the next upcoming week. So welcome you all to another session of USA Weekly Market Report, where we are going to analyze the overall market ahead. So if you are looking at the one section or the headline, you will find geopolitical tensions going on, and this makes the actual economy on the hook, because until and unless these things stops or this thing neutralizes, economy can't go in a smooth way, because you are constantly feeding the money which you require for normal economic movement. Now you are pushing it into war and geopolitics. So at the end of the day, you have limited money and you can create or destroy liabilities depending upon your own requirements, and most specifically with your own decisions. Apart from that, and we wish for the good things to happen and things will neutralize. We wish and pray for that. That's what at least I can do. Market has become volatile, and there is a reason for that, because next week on 21st of September we have the Fed interest rate decision. So probably market is factoring in the volatility way ahead, because market knows that there will be another rate hike, but what they want to listen is the commentary ahead. Okay, and market is probably adjusting that with equal amount of volatility. So apart from that, if you are looking at the news, what you can see, the Fed is facing a growing split in opinions on what it should do next. Okay, so let us see that we will get to know as far as uh, the next 1 week is concerned. Apart from that, Trussonomics, I don't know, but one thing is sure, that the economy of UK will probably take will definitely take time to bounce back, because there are numerous challenges along with the power crisis or energy crisis in the entire European region. So US is no exception, and most specifically after it secluded itself or keep them apart from European Union. So their problem will much more compared to EU, that's for sure. Apart from that, China's retail sales industrial production beat expectations in August. Now, why this is important is because China is one of the largest producer as well as the consumer of commodities. So any change in their number will cause impact on the commodity prices, and in that sense it is important to know about what is happening. But the problem here is we don't know what's the authenticity of the data, how much data is actual and how much data is fake. That's a big problem. Let us see what will happen next. Apart from that, yeah, it's very important to discuss about the bond yields this week, and I've been talking about bond yield for the last 2 months, and this week it is very important to do that, because the kind of aggressive behavior the US central bank has taken, and the kind of furious interest rate hike or the hawkish tone of the Fed can actually cause trouble for the market. And there was an indication for that. I keep on, because bond yields are not moving like any stock, but if it gets uncertain, if things are not looking good, and the outlook is bleak, obviously bonds are moving in an unusual way, and that's where you can sense that there is something which is not good. Apart from that, let us see what lies ahead. No, we don't have any much thing apart from volatility, so let's jump into the market movement where we are going to discuss about what has happened in the market. But meanwhile, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notifications. So if you are looking at the last Friday close, Dow Jones down by 139 points, Nasdaq nearly 1% or 103.95 or 104 points, S&P 28 points. Gold is very near to the lowest end of the range, 1684, and I've been talking about the range which is in between 1660 70 and 1700, where you can actually see an accumulation as far as gold is concerned. Oil is not going down, but it is not going up either, so that's one thing. Apart from that, the VIX has started rising, so above 2023 it's not at all good, so it's trading at 26, so it indicates volatility going ahead. So let us see how things will turn around. Apart from that, yes, this section, I keep on talking about this section. So as you can see, I just want to compare one thing, 3-month versus a 30-year, and I've been saying that because if you see the rest of the things except the 10-year, 1 year, 2 year, 5 year, they are all the yields are greater than the 30-year bond yield. 1 year yield is 3.98, so this is way higher than the 30-year yield, and it simply suggests that for the next 1 or even 2 years the market, or there will be uncertainties. That's what it is indicating right now. So we have to see how things looks going forward. But yes, the main thing is to compare the movement of 3 months yield and 30 years yield. So once the 3-month yield started rising beyond the 30 years yield, or once 3-month yield will become greater than the 30-year yield, then it will be a big problem for the market, and you will definitely saw it. Then you have the US dollar index, which is constant at 109.64, and this strength is a reflection of the policy or the hawkish tone by central bank. And as you can see, if I go to this is the daily chart. So if you're looking at the dollar index, it actually went up to 110, and it has happened on 7th of September, and then it falls down, and then it again rises up sharply, but overall it is in between 108 109. Okay, now if you are looking at the trend or the price movement, you need to be surprised to see that it looks like overbought. But the overall trend is way strong, or way stronger than one can think, and that's why every time I thought that this will be the time when it will move lower, this will be the time that it will move lower, but somewhere a feeling constantly comes into my mind that there is a high probability that dollar index, I don't know how much time will it take, but it will test or retest 119 and 121. So because time and time again dollar index has proven its strength. You may have your own reason, I may have my own reason, but it is very clear that if it continues to sustain above 107 or more, you will have 119 and 121 as far as the big trend of dollar index. Now the actual problem, let's go and check the Nasdaq. So this is you will find the actual problem. Okay, Why I am saying that, let me show it to you, because I was checking out the trend, so I find something out, and if this is the case, then obviously you are here for some more trouble on the downside, and we know how volatile the Nasdaq was in and probably will be going forward, right? So here we are. So this is the price chart of Nasdaq. Now if you may see, this was the top, okay, and this is the, you know, first, I would say, support from where Nasdaq has jumped sharply. Then again you will see the second drop, and then a price jump, and we are on the fifth phase of the correction. And let me tell you one thing, the fifth phase or the last phase will always be the big one, or you will find at least the length is big or the volatility is big. So the climax will always have that you know power or potential to make yourself on the edge of the seat. So if there is something which is yet to be seen, I will not be very surprised. Okay, so this is the 5 phase correction, and it may not, if it is a stock, then I would say that it may or may not happen, but this is index. The probability of waves are very very high, and we have seen oftentimes things will play out the way we see the things, or the way it looks like. So if you are looking at Nasdaq, so it is on the fifth phase of the last phase of the correction. So the good thing is it is at the last phase of the correction, but the bad thing is we don't know how brutal, how sharp, or how big the correction will probably become in the upcoming sessions. So if I may draw a line like this, you can see there is a huge, on the lower end of the support that I can see will be in between 9,000 and 8,500. So going by that margin, I mean, from the current level to 9 or 8,000, I'm talking about 20-25% kind of a crash. It will literally be a crash if it fall down by 20-25%. So let us see how things will evolve in Nasdaq. But Nasdaq right now, volatility time and time again does not looks good. Apart from that, if you're looking at Dow Jones, so Dow Jones will also possess the similar kind of risk. You can see the top, and then the first, the second, the third, the fourth, and it is similar to the fifth leg of the correction is happening right now, which is not at all good, which means that there are still some correction which is left as far as the Wall Street is concerned. And cumulatively, if Dow Jones indicates a downside, if Nasdaq indicates a downside, so obviously cumulatively it will have an impact on S&P 500. So obviously one thing will be there, you can't expect Dow Jones to fall as sharply as Nasdaq, because Dow Jones is not a high beta index like Nasdaq. So Nasdaq, if Dow Jones fall 5-10%, Nasdaq will fall 20-25%. So but at least you can see a 10% kind of correction is still visible as far as Dow Jones is concerned. So we are here for some I would say volatile move going forward as far as Dow Jones is concerned. So things are not at all looking good right now. Things will turn volatile. Individual stock, that's different, but if you're looking at the overall market, so you have to feel the heat, you have to feel the pain, and this may take, I would say, at least 1.5 month. If this is the way Dow Jones will fall, okay, if this is the way Dow Jones will fall, I would say this will this will, here we are, this will at least take in between, I would say, yeah, till December. In between October and December it will get pushed depending upon the kind of price movement. If the price movement is slow on the downside, the time will extend. If the price movement fast, then obviously the price correction will be over, then the overall market will take time to consolidate and make its base before it's actually started moving higher. So the actual thing to understand here is, if you are looking at the overall market, which looks, it's not uncertain, but the volatility is very high because the problem is different and the medicine is different. Okay, so until and unless the problem that we all know gets treated with right kind of medicine, things will move on, or things will remain the same the way it is right now. So you have to be very specific about the price movement, about the market movement, and about the developments more specifically from the Fed as well as from the government. So this is the end of the video. Thanks for watching.